Well, hello everyone. That must be Wednesday, close to 10:30 or 11, because Francisco's in the house.
Yeah, how we doing?
I'm doing good, man. Thanks for stopping by. We were talking about a couple different things the other day, but we were talking about, and this is why I named this again, what we did about a month or so ago, which is why aren't you buying in 2022? Because this is the time to buy. Dave Ramsey's saying it's the time to buy. It's the best time it's going to be in the next 5 years is right now. So why are you on the fence? Get off the fence. I've actually had a lot of people call me up last weekend and in this first part of this week to get qualified because their landlords put their house on the market.
Right.
So you don't want that to happen to you again. Buy a house.
Yeah, no, definitely. I think we're seeing that too, and we're just seeing I think a surge as well. There's a lot more buyers out there again. We're starting to see things pick up once more. I think people are finally realizing like, hey, it is a good time to buy, and it shows. Even this weekend, just going around showing houses and seeing all the open houses. I mean, it was crazy. A lot of people out there.
Right, but it's just a little bit more open out because it's not crazy where and I said this on another show. It's like the only time we're going to have a bubble is when new home sales are including a car with the house. See, you weren't around then, but in 2005, when they were selling homes, it got to the top of the market in 2006. They were selling new homes and said, we'll put a car in your garage, and they included a car. If that's the case, then there's an issue if they have to give you that much incentive to buy the house.
Right.
Okay. Yeah. We're nowhere close to that, nor will we get there with the amount of homes that we have and deplete. We don't have enough inventory, and we need the amount we need. For the 200,000 homes that we're building extra right now a year, it's going to take 19 years to get caught up, according to Fannie Mae.
Right.
So
and
anyway,
I think too, you consider like affordability and stuff. These homes are still affordable. I mean, it's like everyone says. I know that the prices are going up and everything, but wages and stuff continue to rise and all that. So
inflation.
The way that things are, I mean, yeah, we're very far off from I think it's going to take a while. Like there's going to have to be, you're and we're still at a state where even, like blue collar workers are actually, even people who are not in these jobs that are making huge amounts of money, they could still afford. And that's the thing is I think we're still pretty far from that.
Yeah, and we've been talking about doing 2-1 buy downs or buying the rate down to help the clients, which it's a good idea, but I'm saying maybe not do that. And the reason, and you're going to say, what are you talking about, Ed? Because we're seeing now with the way that rebate is on loans, meaning that there is no any yield spread premium to pay for closing costs and that kind of stuff, because the more people who buy mortgage-backed securities and all those people, they need to make money on the loan, right? So they know that the way the loans are right now, they're going to be sold, and then they're only going to be in that loan for a very short time, meaning that they know they're going to be refinanced shortly after that loan is being done. So that costs that investor who's buying that yield spread premium and that mortgage-backed security, they just lost that interest they're supposed to be earning for over 30 years. They just lost it. So they get refinanced, and that's the issue. So we're seeing that going to happen, meaning that we're going to see lower interest rates a year and a half from now. That's what they're thinking, because that's kind of what they're seeing out there. So even if you don't buy the rate down today to save a couple $100 the first year or three, depending on the size of the loan, maybe you don't do that. You take that money and pay your own closing costs. So you keep your money in your checking account for other things that you want to do with the house. Are you following me here?
No, 100%. And I think, it's funny too, because I feel like a lot of the whole craze as well with like doing the rate buy downs right now is because those two, I mean, from what I've been seeing, typically like $200 to $300 that gets shaved off of these more these monthly payments. A lot of the times, I mean, yes, it's $200 or $300, but it's like we always try to coach, right? Like lifestyle changes and things that can help you still stay in and make those payments. But the way that it's all going, I think with the way that the payments and everything are set up, it's still, again, like you said, right, to try to go for the future plan of, you buy in and you lock in on the price right now and then you refi later. Right. I mean, it's even, I'm doing it myself, right? With whatever it is, I think it's just that whole concept of everybody thinking too that, again, trying to time the market. I think it's kind of backlashing, you know, it's going back to a lot of people. It's not ending up in their best interest. You know, people who, for example, were waiting ever since like December to now, you know what I mean? And then just kind of waiting and having that uncertainty when, again, you know, that's the whole point of getting the mortgage, is locking in and knowing where you're going to be at month by month.
Right. Well, the other thing I'm looking at, say that cost to do the 2-1 buy down, the seller's paying $8,000 towards, or just say 10 grand, right? And you save $200 a month. So that's, if that 10 grand is actually that $200 savings to buy that, it's 50 months of payments, right? Why not do that? Keep that money, have it towards your closing costs. You keep that money in your account. You make that difference out of that account for 12 months, right? Guess what? You just now still have $8,000, right? Or for 2 years or 3 years, you still have close to $7,500, $8,000 of that money until you refinance. Are you following me here?
Right. Yeah. And that's the thing too, is, you know, and it's hard because, you know, right now it's with the way that the interest rates are. I mean, I get it. You know, some of these payments do look a bit higher depending on the situation.
They are. I mean, a lot of times 476 FHA is around $3,200 a month with all the mortgage insurance and taxes and insurance, depending on where you're at. As an example, that used to be 27 or 28. It just sounds better.
Yeah, no, I think so. And you know, and I think we're still, I mean, a lot of people are still in a mindset, like a lot of people are, I would say like a 2 years behind, you know, like somewhere around, like they think we're back in that market. And that's the thing.
You're talking about that is crazy market where they can just write an offer for less. Is that what you're saying? I'm trying to understand what you're trying to say.
You know, like, I mean, I would even say at that point, you know, it's crazy. COVID's been around for so long, you can't even really gauge it. But let's just say like prior to COVID, right? Where we were, and again, you know, and it's
2019, 2018.
Correct. Where it was, you know, you could really like say like, yeah, it's a buyer's market, you know?
It wasn't, it was still a seller's market. It just wasn't as super crazy.
Right. You know, the whole, what I'm trying to get at more so is just the whole idea of like this concept of having the affordability being there, you know, at those prices with those rates, right?
Right.
Like people, and that's the thing is, right, we have to factor in inflation and all these other things and how the current market is. And I think that's really what discourages everybody, is they're like, well, oh man, you know, a few years ago I was looking at buying a house, and back then, you know, this is where my payment was. And you know, you're right, they were substantially different. But again, that's where we try to say, you know, what we've been trying to just get out there, even for this show, is just, you know, you get out there, get into something, and then worry about the interest rate, you know, as you go on, right?
Mm-hmm.
That's something that's always variable. You could always change it, you know, so.
Yeah, but this time you're not going to be writing 10, 20, 30, 40 over asking. You know, it's been higher than that. I'm just an example. That's not going to, but October could be there, right? When everybody else is like, oh, wow, I didn't realize that you got your house now. And now 30, their friends are out doing the same thing again. Now is a perfect time because people are still nervous. That was the word I was trying to get earlier. Nervous about what's going on with the market, with the interest rate. Now, interest rates are, you know, they're fluctuating. We're not, you know, we're going to see the Fed raise, but that's not really going to affect mortgage rates. They're in usually this different troughs. They sometimes run on the same, you know, like interstate. They're next to each other, but they don't always run in the same thing. But we're seeing that going forward, we will have lower rates because we are going to go into recession. The difference is this is probably going to be the first time in history that we have inflation and a recession at the same time, because what's causing the inflation right now is the oil issues, right? When the whole push, the Green New Deal thing, and I'm not getting political, that's what's causing the gas stuff, the prices going up. And I don't care where you lie on that. The issue is if you have an administration who doesn't want oil to be produced, all that kind of stuff, you're not going to have oil and gas companies going out and drilling and doing leases and putting millions and millions of dollars in over, and in 2 years it takes them to do this kind of stuff. So you're going to have these problems.
Right.
That's the issue. It's the rhetoric that's coming out of there. They don't want to invest. So we're going to have these prices. That's one part of the inflation. You have the issue with the supplies getting here from other countries, and we have that other issue. So we have these issues that we can't control, right? We can't as people, but what we can control is getting our house, getting the payment, and then refinancing down the road.
Right. I think too, I mean, I had seen this video, and I think the way that they said it was pretty much we're going to be entering like the general economy is definitely going to be in this recession and this downward state, but the housing market, it's not really going to.
No, that's what happens during a recession. Housing goes up and rates go down, so it gets crazier.
Right. And and that's the thing too, is and you said it perfectly, because we're also still within, the summertime, people vacationing, the kids are at home and stuff, not as much people want to shop. This is always a really good time. And I've been telling everyone, get out there and, it's funny. I'll even have, I had a client, there was a house for 500,000 and she's like, man, I don't think the house is worth that much. I think it's worth more so around 425. I just told her, just submit, write it up. Why not try it out? Because I mean, the way it is, and especially when you see some of these homes just sitting how they are, and it's interesting. I mean, seeing some of the homes that are sitting, homes that, you look at them and you're like, well, that shouldn't be.
You guys are talking sitting 30 days. That's not a big deal. That's the problem. We're so used to just, I put it on there and 2 days later, you want me to sell your house? I can sell your house in 2 days. I'm an amazing agent. No, it had to do with the market. Has nothing. And that's the issue. We're in a part where this is normal for a house to be on the market for 30 days for people, because you got other stuff going on right now. As you said, vacation, out of school, getting ready to go to other things. That all comes into play. The issue is, and then the uncertainty out there. But as somebody who wants to buy a home, take that and jump on it and get your home, because you're going to look back at this time going, I was so smart to do it now than later. Don't do what everybody else is doing, which is not buying. Do what other people do, like Berkshire Hathaway people, not the people who, the investment guy, Warren Buffett. He does things when other people are running. Right.
Yeah. I think that itself too, again, it's just, I mean, and you look at, granted, the history of housing, I mean, from, let's just say right in the beginning, I mean, it's always been upward. Housing, it's always a great investment. And that's especially the people that are renting. I mean, we talk about, some of these, some of the money that, we were even saying, like with credits and things like that, right? I mean, imagine the money that's going towards rent, all of that money. I mean, it's a lot.
It's $37,000 a year on
right.
average.
Yeah. And I mean, especially, what you can get for rent and stuff right now. I mean, you might as well be buying.
You need to be buying, period. You're paying someone's mortgage. You might as well be paying yours. Yeah. Hey, let's look at your numbers before we go too much longer. We've been doing this for 12 minutes. I'm sure we've had people come and go, but let's do your numbers. All right, let's do this. All right. So this was what we showed last month, right? We had this on for last month, and we showed the inventory was right here at 984, right?
So it's 984 pendant homes,
right?
926 sold, and 794 794 listed.
There it is. First, the light one is for sale.
For sale.
Dark one is sold, and the line is pending. I can't even talk today. So with 984 pending right now, 794 for sale, and we sold 926. This must be Stanislaus County, right?
Yeah. No, this was I collabed Stanislaus and San Joaquin.
Right. Okay, that's okay. You did. Yeah, right there.
And then if you go to the next file,
you want to talk current, right?
Current, right? So look at that. I mean,
we have a lot more for sale.
Correct.
Let me go back. What's the difference? 794 versus 1174. So we have 3, 4, almost 500 more homes.
Right.
Or something.
The for sale or the sold homes it's
down. It's actually 20 less.
Yeah, and then I mean the pendant homes it's a little bit down too, but the pending homes are still kind of, houses are still selling.
Well, we got 920. I know it's what happened is we, for a period of time, about almost a month, no one did anything, or the 3 weeks, or like, I'm nervous, and they just closed on the houses that were sold, already in contract. Now we're looking at stuff going forward. I can see this is the June. All right. So I see what this means is the people who weren't able to get a house before are now can go write their offer and not have multiple. I mean, they're going to have potentially multiple offers. 476 and below in our area. San Joaquin's a little bit higher than that, but if you're talking Stanislaus County, FHA, 476 and below, you're still going to have a couple offers.
Right.
And I know you said before this that you had somebody who wanted to write an offer on 500 and who thought the house was only worth 425. Well, I'm gonna tell you right now, I had appraisal done on my house. It came in $100,000 over what I thought it was going to be.
That's crazy. Yeah.
It's not crazy. It's just, we don't know as people what our house is worth. And I try to explain this. Sometimes we think it's worth so much, right? And I say this, nobody's baby is ugly to them.
Yeah, that's like one of the best analogies too. I think, and it's
Are we done with these, or you want to go over them more?
Yeah, no, that's really just what I wanted to touch on is, like you were saying, and you explained it perfectly as well, saying how everything just kind of closed. And then for that while, everyone was just waiting. And then you see, these homes up. And I mean, you see more. And now we're also starting to see, I mean, look at that, from 800 to a little over 1,100.
Right.
I mean, we've also got quite a bit of the sellers who are like a little late to the train. What I've even been seeing too is, like you said, even these houses that are getting multiple offers. For example, with the people we're helping with right now, there were multiple offers on that one. Granted, that one had been sitting for a while. They had done price drops. And had multiple offers, and each offer was either going lower or asking for credits.
Right. So we didn't have to go to the other one. They're both right here because this is April, right?
Oh, yeah, right.
Here's May. So pending was 901 and 7. So we actually have more houses going pending right now than we did. So that's a good thing. I wish we would have had 20, like 21 and back. You know what I mean? To see what it was a year ago. Because one of the things, the issue that we have, so we had 794 and 1144. So, that's a difference of almost 400 homes.
Yeah.
90. So, but if we look here, 953 versus 908.
I think if you still have the other files
I
that I had sent, you should be able to bring it. It's going to be the one that said
the current.
No.
Oh, I don't have the older ones.
The older ones. Okay. Yeah. No, but
I can't store that much stuff.
I know, right? But across the board, I mean, yeah,
it's a great time to buy because there's a little bit more inventory, and that's why you should get out there and do it. If Dave Ramsey, who is the one guy who tells you never to buy real estate or never to do this, never to do that, is saying this is the best time to buy in the next 5 years is right now, there is something to say to that. And when he says there's not going to be a bubble, like I've been saying for the last 6 months, and he's saying that because he sees the same thing I do, it's not going to happen. Stop running from this. The problem is people your age, this is the first downturn they've seen in some type of the economy they've seen since they got out of high school has been amazing. They haven't seen the stock market take a hit like we just saw. This is the first time. Somebody like me, I've seen 12 of them. This is nothing.
Right. And it's it's good that you highlight that too, because I mean, you still even have, people who have been, and have seen, these different markets also have some skepticism. And, that's what we've been trying to break, is just to be able to just go through with it, because
this isn't 2006, people. Nowhere close. We don't have 3.5 million homes on the market.
Yeah. No. And
we have 920 probably.
Right. And even then, and I know we're always trying to, obviously help as the buyers and everything too, but as sellers, right? Like I've even been telling people who, again, need to sell in order to move into a new situation. This is the perfect time too.
Mm-hmm. This is the best time for someone to sell a home, and the best time for someone to buy a home. And it hasn't been that way in years.
Right.
So it is. And that's, again, I'm re-saying what Dave Ramsey said, which I've said is, and the only reason I'm bringing him up is everybody thinks he's the guru on everything. I don't agree with everything he says, but definitely what he's been saying recently, I totally agree with.
Yeah. So, 100%.
And he has a little bit more followers than I do. Just a touch.
Credibility.
No, I didn't say credibility. Now you're really getting there. You get off my show.
No, yeah, but yeah, no, I think at the end of the
day, he's not the only person saying it, but he has a lot of following from him telling people, cut up your credit cards, cancel them, which I'm against because you lose all that credit. He's dealing with people who are like, can't control their credit usage.
Yeah.
Right. So
yeah, no, and get out there, people.
That's right. Call us, get a hold of us, get a hold of Francisco. He'll take care of you.
No, definitely. And again, I mean, it's just, don't I just always say, don't let the facade that's created, especially with, everything that goes on with the media and everything, don't let that judge, your purchase.
No.
Let your, I always tell people, don't base your purchase off of the general market, base it off of yours. What's your current wants and needs?
The current time, the best time to buy is right now, because the market, interest rates. Don't listen to media. They're trying to sell papers, and if they still sell papers, I don't even know if they do. But watch the new. They want you to watch that. That's negativity sells. That's why they push that. Yes, we had less home sales last month because there was less homes to sell. It's, there's lies, damn lies, and then statistics. That's what Mark Twain said. And that's all they're doing, is they're manipulating the statistics to sell what they want. Get out of it. Don't listen to your friends. Don't listen to professionals. Get out there, get your house. You'll be very happy that you did. That's all I got.
No, for sure.
You got anything else?
No, that's it. I mean, like you said, saying everything real good. So thank you, everybody, for the time.
Yeah. Have a great day. And thanks for watching. If you like what we do here, just